Recently I met a client in the Midwest that was working with one of the top 10 CPA firms. And here's the problem with top 10 CPA firms. They're not integrated. Their approach is segregated. So the tax team wouldn't talk to the accounting team, and the accounting team doesn't talk to the advising team. And this client was highly frustrated with that. And why were they frustrated? Well, his wife became a real estate professional. And for 2 years on their tax return, they didn't show her as a real estate professional on the tax return. So they had real estate losses they couldn't take against their active income. It literally cost him $1 million because of this mistake amongst this firm. And the firm was very apologetic. Once I came in and looked at the tax returns and told them it was wrong, they went back to this big firm and said, yeah, you're right, we just didn't communicate. That is the problem with the big firms. And also a lot of big firms, they don't want to get anywhere near the gray area, right? I believe in going into the gray area and going up to the line of the tax law. I don't want to stand back here. Like I said, a lot of these accountants out there will say, oh, red flag this, red flag that, whatever, where they don't want to take advantage of the loopholes because they're going to say, well, that could be challenged. So that's a big problem with the big firms as well. Most biggest problem is that they're super expensive. They don't communicate with each other, and they're not concerned, about providing a decent ROI to you, a decent return on your investment as a business owner. If you are a $10, $20, $30 million business, you're too small for the big guys. Whereas if you go to a middle market shop, you're going to be a very attractive client to a lot. You have to be a publicly traded company that needs an audit for a lot of these firms to be interested, because a lot of the big firms just do audits.